Hey everybody, welcome back to day 4 of rebuilding the office underneath me. And they are hanging a sign on the building right behind me here. So, um, I don't know if you hear crazy sounds, sounds like an air horn or whatever. They're working right underneath me, rebuilding the office space underneath me. So, fun times. Anyway, just throwing that out there. PSA, public service announcement. So, the construction will continue until they get done. They're hanging drywall and I don't know what else. Hammer drills or impact screwdrivers or whatever, going crazy. Saws. Um, it's metal studs, so anytime they cut a hole in anything, it's like shakes the whole floor up here. Concrete floor in between the spaces, but loud. That's what I gotta say. Anyway, so if you hear the crazy sounds, that's it. Yeah. Not right now, but just wait. They're outside arguing about the sign they're going to hang on the building at the moment, or somebody is. I can hear them right out the window. Right there's a window right there, and then they're hanging the sign like right beside me there. So, God, I love it. Hey, Kimberly, my favorite subscriber. Welcome everybody else. We've got Larry, Don, and Kevin, Dan, Craig, Arturo, David, Svenborn, Piet, Carlene, Sabina, Sergio, Mary, Stephen, Skaggs, William, Ralph, Ted, Cliff. Good to see everybody. Good to see everybody. Ed, Rongamer, Pauline. I think that's General Rush. Maybe. Anyway. Good to see everybody. Good to see everybody. And Eli, good to see you too. And good morning. Welcome back to the show. Finally happened. The moment we have all been waiting for. Jerome Powell and the Federal Reserve gathered in their hallowed halls, counted the tallies, consulted their ancient texts, and decided to bless us all with another quarter-point rate cut, the third one this year. And the response, well, the market did exactly what we had expected. It went up till it took it all back last night. Stocks went up, bonds went up, gold went up, Bitcoin went up, even my neighbor's vintage Beanie Baby collection went up. But the rate cut isn't the real story. No. The real story is the magic trick that is being pulled right in front of our eyes. You see, alongside the rate cut, they also announced they'd be running a $40 billion value of Treasury bill buying every month. Now, normal person, somebody who hasn't been maintaining any financial news, hadn't really been paying attention, you might call this quantitative easing or money printing, but not our Fed. No. They're very, very clear that this is not QE. Actually, it's not, easing for the broader market at all. They're trying to keep the federal government solvent. But it's kind of like your teenager coming home at 3 a.m. smelling of cheap perfume and regrets and insisting that they were at the library. It's not true. They know it's not true. We all just kind of smile and wave and avoid the scene. The Fed is basically telling us we're just adding a little liquidity just in case, it's reserve management. We're a little bit light. Purely just a technical adjustment, right? And I do ballet on YouTube. I mean, come on. This whole thing, not QE. That's the story, though, because it tells you everything you need to know about the corner of the Fed that it's backed itself into. Powell has said he has two goals: fighting inflation and keeping people employed. When he says stable prices, he really just means stable prices for the government, not stable prices for anybody else. And we're a bit of a tension right now between the two because employment is dropping. We've got the most layoffs we've had since the Great Depression, basically, since 2008. You know, we're going to exceed 2008 actually. So Great Depression is probably the next one down. Although we didn't track layoffs and stuff back then in the same way, so hard to compare. And then we still have inflation. They're projecting by the end of next year they hit their goal, 2%. Maybe. But the funny thing is they're blaming higher prices on tariffs, but tariffs aren't actually the higher prices. Tariffs destroy demand, so tariffs bring lower prices. So tariffs actually have more effect on the inflation than their interest rate. So they should actually just cut the rate. Even more, maybe, if they're really serious about fighting the job situation. I'm just throwing that out there. So Jerome's saying they're in a bit of tension. It's kind of like saying the hurricane is a little bit breezy. I mean, picture this. Powell's a tightrope walker, just like the thumbnail. On the one side of the canyon, you got raging inflation, still running hot over 2.8%. And really, if you did it the historic way, it's closer to 10%, well above their 2% target. On the other side, you have a slowing job market with unemployment rising up to 4.4%. And he's trying to walk this impossibly thin rope between them. And his solution is to start juggling chainsaws because, that's what cutting rates while inflation's still high and firing up the money printer. And I mean, sorry. These are technical reserve management tools, not money printers. And the best part, on the other side, the tightrope walkers in the room can't even agree on which direction he should be leaning. The vote to cut rates was 9-3. 2 of those were no cut. 1 of those was a bigger cut. And the other 9, quarter point. This is actually the most divided the Fed has been in over 30 years of managing fiscal policy for the United States. One guy, Stephen Mirren, wanted to cut rates even more. Let's say jump the canyon with a rocket. Then you got 2 others, Schmid and Goldsby, who just wanted to hold it steady. And let's just stand here and see what happens kind of mentality for those 2. I mean, it's a mess. It's a beautiful, chaotic, opportunity-filled mess. So what's the investment play here? How do we, the savvy traders and investors, make money off of the circus? Well, stocks, the market heard rate cuts and not QE and immediately threw a party, jumped. Dow was up 500 points. That's the big one. I don't watch it, but, makes a great headline that was up 500 points. We saw a pro-cyclical tilt, meaning that sectors that do well when the economy is expected to grow, like industrials and consumer discretionary, they were leading the charge. The logic's simple. Lower interest rates make it cheaper for companies to borrow and expand, and this new liquidity has to go somewhere. It's flowing right into the stock market on day one. Second off, bonds, they rallied too, especially on the shorter end. The yield curve is steepening and will steepen as they push that rate down, which is a classic sign that the market thinks the Fed is done cutting for a while. And maybe, just maybe, inflation will stick around. This don't fight the Fed, that's kind of like what's going on here. That's people investing in bonds to not fight the Fed and their actions. And this is my favorite part. Gold and Bitcoin, they both surged and then kind of took it back because they're the ultimate I don't believe you assets. And if we're really going to print money in a not QE kind of way, that's devaluing the dollar. And what do you buy when you think the dollar is going to lose purchasing power? Things that hold value. The hard stuff, things you can't just make. Digital gold and actual gold, they're the fire escape plan for fiat currency. And finally, the dollar, it took a hit naturally. If you're printing money, if you're making more of something, supply and demand, supply increases, demand's even the same, demand doesn't keep pace, then you know, prices go down, value goes down. The article that I kind of looked at to help me make this whole summary made a great point here. Don't count the dollar out yet. With other central banks around the world looking even weaker, the dollar might be the cleanest shirt in the dirty laundry basket. Think about that. Like, it's all dirty laundry. It's all fiat currency. It's all being devalued. But do all the other currencies devalue faster than the dollar? So here's the bottom line. Jerome Powell is trying to land a 747 on an aircraft carrier in a thunderstorm. You Navy guys, you can picture this better than anybody else. He's telling us everything is fine, the turbulence is normal, and ignore the smoke coming out from under the hood. He's betting on productivity miracle. I don't know. He kept disclaiming AI. I don't know how we're going to magically increase productivity to magically fix everything, but if we can pull off the hat trick, hey, great. Otherwise, he's just trying to jawboning the markets, and for us, that means volatility, and volatility means opportunity to make money on price swings. So how do we predict? Watch the price charts, and that's what we'll get into now. Dun-dun-dun, dun-dun-dun. Jump it over, and let me just adjust something here. Flip that over. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. If you put money into work in the market, you might lose it. If you trade it, you probably more than likely lose it, because something like 95% of people that trade lose money for a good reason. It's hard. This is hard. This presentation here is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. And if you desire personal financial advice, hire and consult a financial advisor. Be careful out there, everybody. That's cool. Let's see if this logs in. There we go. So we've got cracked $40,000 year to date. There she is. Look at her go. Beautiful dreamer. So how do you make money in the market? Follow JT right here. Yesterday I did not get one of those put in this account. I guess they were limiting my ability to leverage the positions I have yesterday. I don't know why. No notice, no nothing, just wouldn't let me place the trade. So that's cool. Skip a day, keep going. I did close TSLL call options. You know, they did monkey with them. I had 2350 sold, and TSLL was not at 2350 yesterday. It was down at 19, so I was able to book that out for 95% gain. I'll take it and keep moving forward. Right now, all the options on TSLL are non-standard due to the surprise return of capital dividend yesterday that they suddenly announced after the market closed on the 9th. And that's where we're sitting. So looking at ES price action overnight was interesting. Look at this. Giant pop right up to the point where I said we might pull back. Initial drop very violently, might I add, overnight. Look at this. Like, we didn't quite touch that magic 69.20 level. Got pretty close. Reversed it hard. So now we've got to watch. We had our event here. We're going to have to watch this a little more closely. Try to get this right on the money here. Right on the money, honey. Right there. Turn that crap back off. So look at this bounce. Here's the low we made last night. That was about 10 p.m. Eastern. And the market closed at 4 p.m. and immediately started selling back off. By 10 p.m., we were below yesterday. Now we bounce to a 618. So this is a key level right here. If we stay below the highs, I'm going to put the alert up here at 68.90. This is kind of, volatility is increasing here. So if we stay below 68.90, odds are coming down here. I know you don't want to hear this. Nobody wants to hear this. Nobody wants the market to go down, although I kind of do because I want increased volatility so I can sell more of those put spreads, but let's remove that. So here we go. We're still at the same targets. Funny enough. That's if we start down today, that's the first zone of resistance or support, I should say. Support's below us, resistance above us. Next line of support down here. That's about that 100 points down thing I was talking about yesterday. If we can do the 100-point down. Now, if we don't stick the 100-point down, if we don't find support there, if this does get a little more aggressive to the downside here, we could bounce and see another 100 points down. That gets a little bit crazier, but that's right where I had this target down here. So we may be in for a little more downside for a couple days. Awesome, right? Now, yearly, this looks like right now, if we continue this downside for a couple days, I want to show you this right here. Zoom her up. This is exactly what we did. Red, red, red. Right there, we did this. 20, 21 in December. Then we shot up 1, 2, 3, 4 days to new all-time highs and parked there for the end of the year. Started out new all-time high, and then the year was down from there. This is a warning sign. Deja vu. Deja vu. Seen this before. Has me very concerned. Right here. Has me very concerned. This candle pattern. If we'll put some big red ones on the board here. And then we rip this back up to a new high going into the new year. That is eerily like 2021 heading into 2022. And we spent 2022. There's the background noise for you. We spent 2022 going down for months. I have to remind you back here. And this is what we're talking, this pattern right here is what we're looking at. And we've spent through October, basically the end of September, beginning of October, doing that correction right there. So, yeah, they're banging and drilling and all sorts of stuff right at the moment. Oh, multiples. Gonna sing to each other. What the heck? I'm sorry, everybody. Can't do much about that. And that's what we're looking at. So as long as we're under this high from right here, the potential for this to drop on out is elevated. Right there. So NASDAQ has the same kind of thing. The 618 level right down here. If we can bounce off of that, we can go all-time high. But if we crush through it, be careful. And if we do make an all-time high, that can also set up for downside. So, yeah, going to town down there. I don't know what they're. I mean, that can't be just drywall right there. Whatever they're doing. So I don't know. It's drywall is not that thick. So anyway, it's awesome. Russell might be able to pop our target here at 2,600. Might be able to pop it. If it does that, this could set up for a longer term downside also right here and kind of lead the market down. CL, well, here we go. Oil, I've been predicting is going to break down and make that lower low. Then possibly a hot war in, missiles flying. Draw a missile. Maybe shooting some missiles out there in the Middle East. And we'll see what happens. Gold. Dun, dun, dun. Gold potentially dropping. They're rebuilding the office underneath me if you missed the opening there. I explained it all. So this is like day 4 of this going on constantly. So gold is in a downtrend. Be careful. Lots of people think we're going to pop it, but this opens the door for downside in a big way. As long as we keep making these lower highs right here. Little bitty trend of down, and then it also connects up with a big downtrend. So, golly, man. So annoying. Bitcoin. Bitcoin, come on. Failed breakout. Failed breakout right here. So, watch out. We tried to break out. Made 2 highs here, 2 highs here. This is not bullish for continuation higher. This can end up down here very easily, and that kicks off the high potential that we have crypto winter. Ethereum didn't quite get to the level I wanted to see for continuation higher. Really wanted to get above that daily roadmap line. We got right to it, but we rejected right under it. Not great. And they don't knock this crap off. I'm going to have to wrap this up because I'm sure that's annoying for everybody. So I don't usually cover silver or copper on the daily morning show because they don't matter that much for most of us. Apple, if we break that back down below here, we're coming back down. Probably retest this uptrend of lows. I covered copper and silver on Tuesday. There you go. There's Apple. So, God, shaking the desk even. It's annoying. They're going at it, whatever they're going after. Maybe they'll quit for a minute. And Amazon still has this potential head and shoulders in place. Google, still 337, not much change. Meta, looking for this to finish retracing from that resistance. Here's the support. We do that. We hold here. Long-term upside, probably 1,300 on the price. Be right up in here. That could take a while. 11, 12, 1,300. Microsoft keeps being soft. Has not been able to break through resistance. Held at 618 again. So we made this low down here, made this high up here, and we've retested this 618 a couple times. As long as we can hold on to it, we're okay. But if we start slicing through it, we're probably going to come on down, and that can open the door. If we get below about 460, we can come on down to 415 to 420. Nvidia, still potential to retest the roadmap line one more time. If we hold a higher low, that can be bullish, but if we break down, make a lower low, this can come back down like I've talked about for weeks now. The 150 area and retest the breakout, the highs, breakout above the highs from last year this time. And Tesla is just sitting. It just can't find momentum to actually get going. Sitting, cooking. And Netflix still hunting a bottom. Pushed on down below 95 and that 91.70 area. We're down to this consolidation we did back here coming into this year. So we're back to kind of retesting the breakout again. We already retested it over in here. Broke out, retested, and then shot up. But now we're back to retest it one more time. And we have a list of gainers and decliners. But the biggest list is the stuff set up for targets today. I mean, entries today. So I'm not sure that's the right list. Let's see. No, that is not the right list. Save, reload. There's yesterday's list. Pine editor has moved. Cool. I'll probably have to find that later. Anyway, jumping on down here. Here's the list of movers. Things moving up $2 or more. Boom. Well, that went up a whole lot, 44%. SMX moving up, but that's still a dumpster fire. Reverse splits galore. I wouldn't touch it. CIEN, Lily. Yeah, let's go check out some stuff that is on the list for Oracle. The whole pullback last night was blamed on Oracle, but that was not a big pullback, really. And it's holding a higher low, so this has still got opportunity. Didn't break through the roadmap line, as I was warning yesterday with Jack. As long as we are under that, still downside potential. I was talking about that on the Market Master Show, which you can come hang out with me at 11:30 Eastern Time every day with Jack. We also put that on the Financial Wars YouTube channel, so you can check out the replays on that channel if you miss it at 11:30. We've got those going again. For a while, we weren't putting them on there. GE Veranova, probably going to retrace. Anything else interesting? Coinbase, maybe one for a 618 retrace. Staying with strategy. Bitcoin's being weak, so see. SMH, probably going to retrace. MU, definitely at targets. Reddit at resistance. If we can push through, 300 upside. WDC, be careful for retrace on that one. BABA probably needs to hit the 145 area. Hood, I've been warning about. Watch out for this to come down. Lots of people keep telling me it's not going to retrace. I keep warning that it has a pattern that has historically led to further downside. Please be careful if you're aggressively long Hood. Be careful if you're aggressively long PLTR. While it did kick off an entry, it can result in a further downside. There you go. That one did fire off. It was on the list, even though it's up here in the decliners. And there's lots of stuff. So if you're interested in decliners, there's the list. And setups today. AAOI. Now remember, at the bottom, anything less than 30 trades is not statistically significant. So that means we have to fall back on the historical of the pattern. Historical is 75%. This pattern works. And a profit factor of 1.2. This pattern works. So we got the entry right here. And there's the target. That is a bigger risk. $1 below the low. $1 below the low. And the target is up there at the 1.1448, which is 90% of the way to the 1272. 1448 is 90%. So I commonly refer to these as fuzzy zone targets right here. I did a bunch of back testing to figure out what zone was the best zone to try to target for the highest win rate. You know, best bang for the buck without giving up more. 90% of the way to the 1272 just happened to be kind of the most optimal place. It gets you 75% win rate. When you enter on a close above the 618, right there. That does leave 25% of the time, though, that they fail. So be careful. It's kind of the setup in a nutshell. If you don't understand, click on the link, my homepage, go to the channel homepage, go check it out. I give you the code, I explain the whole thing. In that video, I talk about the 1272 being a target, but I did more work since then and found that the 1448 is even better. Even better. Put a lot of numbers to it. So this one also doesn't have enough trades, but 75% of the time, 48. Now, another concern I didn't have when I did the video below, like how long do these take? How long, if you get into this right here, how long can you expect it before it gets up here? 45 candles on average. Remember, the candle maker is not open on the weekend for the market. So that's the average, but the standard deviation is 35. So if you had 3 standard deviations to cover 99%, there's roughly 150 candles. That's 7 months when you take out weekends and holidays. So if you're trying to play options on any of these, and you don't want to run out of time 99% of the time, 7 months. Knock off 35 days, that gets you 95% of the time. Knock off another 35 days, that gets you 68% of the time. So if you're like, I'm going to go a couple months out, like 80 days, right? 80 count, this is 80 candles, not 80 calendar days. You go out 80 candles right there. You're covering the average plus 1 standard deviation. Well, that's only 68% of the time. Right there. That still leaves you, unfortunately, 32% of the time you're going to run out of money or run out of time on your option. So 32% of the time we're going to last longer than that. And even if you do the 7 months, 1% of the time, roughly, it's just going to go on for who knows how long. That's the way standard deviations work. So AIG, yeah. Sketchy. Sketchy price action here, but that's the entry. 90 is the target. AVT. And that one picked up the smaller bounce here. I have a Python tool that hunts for these very aggressively. And then the tool sitting here in TradingView finds a more refined approach. So this one can work and still be in the downtrend, but I wouldn't chase that after, into the downtrend there. That one has not so great statistics anyway. Like this one is a net loser right here. Anything less than 1, and this does have a statistically significant number of trades, more than 30, is a net loser. So I probably wouldn't touch that one for me. Yeah, the thing is, David, if you play shares, you never run out of time, so just saying. There's that one, 58.64. CAE. There's the high, there's the low, there's the entry, 30.32. Krispy Kreme. Get on some donuts. Entry 5.36. Things under 20 bucks, less than 20. I usually don't trade them because they're a little bit more unreliable. This is not the strongest uptrend. This is still kind of a watermelon seed squeeze. Lower highs, higher lows. Not loving that price action. Why would I show it off? It's a learning experience. How do you know what good price action is? If I mean, how do you know what bad price action is if I'm always showing you the good price action? So, I'll show you good ones. I show you bad ones. Show all the ones that show up. Now, unless you have statistics that suggest this isn't going to work, like this one's negative, this one's a net loser, comes in under the statistical average, so I probably wouldn't trade it. But that doesn't mean it won't work. EWA 27.96. If I was going to trade it, I'd probably put less money at it, but since it's a net loser. FHI. Here's the high, here's the low, there's the entry, 55.51 targets. And that one's a pretty good one. Out of all the bad ones, this one's statistically significant. Almost an 87.5% win rate, right? Almost 90%. Yeah, that's a good one. And then a profit factor, almost 3. Check plus, check plus, check plus. That's a good one. EHI right there. Federated Hermes. Sounds like a STD or something. There's the entry 662, if you will. Here's the high, here's the low. 65.23. Hack. Here's the high, here's the low. Entry 90.53. IPGP. High, low, entry 95.39. Dismal profit factor on that one. Although it doesn't mean anything. Less than 30. 752. All low price stuff. Here's the high. Here's the low. Not quite on an entry on if you go from the ultimate high here. I'm sure it picked up the lower high. 275. Target. That's another good one there. 50. Like if this actually closes above 258, highly likely we're going on to 275. Highly likely. Not guaranteed, but highly likely. IWP. And not all these things have options. I searched through 4,000 tickers. Hunting for setups ripe for the day. 147. I missed that high just a little bit there. Yeah, 147. MetLife. And we're going to drill right under me again. Awesome. There's the entry, 85 target, NIC. Here's the high, here's the low. Entry, 145. NVEC. Here's the high, here's the low. Entry, 83.54. Not great statistics. That one not set up. Let's see. High, low, just shy of actually triggering 55.62. Funny enough, Python, the way that they do their moving averages and the way that TradingView does their moving averages is different, and it results in different numbers. So sometimes what triggers on my Python code is slightly different than what triggers in TradingView. This is the entry, and that would be the target because of this little dip right here below the roadmap line. REVG. Here's the high, here's the low, there's the entry, 67.50. ROG. Wow, there's quite a few of these. Still, 39 tickers were on the list today. There's the high, there's the low, 101.30. That was a reasonable one. Reasonable. Profit factor slightly better. Yeah, that one's not going to be one I want to get after. SKYY. SKYY? Yeah, SKYY. 146.96 target right there. SNEX. There's the high. And they're doing something on the building. I can hear it right behind me. I don't think it's loud enough that it picks up in here, but they're doing something. Sounds like they're drilling through the side of the building. 27. This one's pretty good. 80, almost 89% and profit factor 4. So this one's probably one that's gonna work right there. 109.30. Stop always $1 below the low. Whatever the low is, subtract $1. That's your stop. SSB. Here's the high. Here's the low. Look for that close above 96 to get the target up here at 108. Fair statistics, not smoking hot, but fair. Here's the high. Here's the low. Entry 42.12. UCTT. Here's the high. Here's the low. There's the entry and 32.58. UMBF. There's the high. There's the low. 129.34. Negative profit factor. Net loser. Be careful on that one. Purple monster talking back to me today. Hadn't had purples in a long time. A few months. 143 target on that one. Stop down here, $1 below the low, around 108. VREX. Here's the high. Here's the low. Entry 13 target. Be careful on that one. Very negative profit factor. Alerts galore. Cool. Here's the high. Here's the low. There's the entry. 1876. Wyco group. Interesting bounce here. 36.08 target. It's not bad. 36 trades. 80% of the time it works. That's what I look for. Profit factor is just standard. WOR. Yeah, don't like this, but it did grab it. Here's the high. Here's the low. Entry 59.77 target. It works 86% of the time, so probably going to work even though it looks kind of sketchy. But it can pop up there and still go on a downtrend. XM HQ 108.45. Yeah. So I kind of outlined the potential here on ES. Bias for the day is looking for that drop. We're probably going to break down, probably going to go lower. If we can break back above that 68.90, we're probably going higher, but as long as we're below 68.90, this is where I expect it to go. It doesn't have to go there today. It can take into next week to get there. But that's probably what we're going to do. If we push on down to 67.30 area, sets up for a lower high bounce, and then probably another 100 points down. That's kind of my outlook for the day. A little bit bearish for a couple days. Not long-term bearish, just I think we're going to do a bigger correction. I've had it drawn on here for a couple weeks. We were probably going to come down to this area. I thought we would just do it on the reaction of the FOMC, but we've popped first, and now we're starting down. So we'll see. So, first target, this is like not guaranteed we're going down here. We could bounce at any of these points, but that would be the most ideal place to come down to. So hope that helps. Be careful out there. This thing could turn into something nasty today if we decide to go faster. Remember, cutting rates and all that stuff, you don't cut rates into strength of the economy. Cut rates into weakness. Despite what any mainstream media says, despite what all the hype's about, we cut rates into weakness. Things are weak, so we're cutting rates. Be careful, everybody. I'll be on Market Masters, 11:30 with Jack. That'll be on the Financial Wars YouTube channel. I'll be back tomorrow. Same bat time, same bat channel. We only got like 14 closes left in 2025. And then we're on to 2026. Only 14 days left to trade. Have a great day. See you tomorrow. Bye for now.